Hello friends, this is Deepak and with me we have Sanjiv ji, as all of you guys know. So in today's video segment, I wanted to kind of get his insights into the newly released Indian budget. How does that budget impact us, especially the NRIs, and what might have changed, if it's better for India or worse for India. Let me try to get some of that opinion from Sanjiv ji.
Yes, so the Indian budget was presented last week in the Parliament, week of February 3rd. The main thing when we look at the budget is a balancing of income and expenses. If they give some benefit, that's an expense. They have to raise some taxes, that's an income. But this budget we should commend Prime Minister and also Finance Minister for giving the benefit of lowering taxes at the same time not increasing the taxes. So that's I will say is a summary of the Indian budget. So when it comes to the non-resident Indians, we are here, we are Indian born Americans here, but so we are non-resident Indian. When for us the budget has a lot of things. First thing is it's lowered the tax rates for our income, for NRIs making income in India, in terms of rental income, dividends, interest income. So it's lowering the income slab. It's lowering the tax on the income slab. So if you make if you make up to 3 lakh rupees, you're not paying any taxes. Earlier it was 2.5 lakhs. Now it is 3 lakh rupees. So up to 3 lakhs there is no tax. But the important thing with that is, if you make from 3 lakh to 6 lakh, you get a 5% tax rate. Earlier it was 20%. And then it is from 6 to 9 lakhs, it's now the tax rate is 10%. Earlier it was same 20%. So you can see the difference. So if you're making less than 10 lakh rupees, Indian rupees, you pay only around 10%, 7 to 8% in taxes, as compared to 20%, 16 to 17% in taxes in that, as per the old system. So that's the first thing. For second thing comes is a gift. A lot of people, resident Indians, give gifts to foreign people, the people living outside India. So what this budget says is, if you are a resident but not ordinary resident, means if you are a non-resident for a number of years and now you thinking of going back to India, when you go back to India and stay there for 2 years or more, that 2-year period you become a resident but not ordinary resident. After 2 years you stay there, you become a resident. So in that 2-year period, if you receive any gift, resident but not ordinary resident receives a gift from a resident Indian and you're not a relative, it will treat it as a deemed income arising in India, and you're subject to taxes at the rate of 37%. Earlier it was not. Earlier it was only meant for gifts given by resident to non-residents if they were not relatives. If they are not relatives, if the non-resident here are not relatives of resident and receiving a gift from resident, the non-resident here was liable to pay tax of 37% on the same concept of deemed income arising in India.
So basically, Sanjeev ji, just to make sure, so if anybody is planning on moving to India this year, then they should not be really accepting a gift for at least 2 more years.
2 more years,
right? So, and is this 2 more years more like a 24 months, or is it more like
2 years? 2 years, calendar years.
Calendar years.
Calendar years. 2 years is 2 years. So that's important from a gift point of view. So when a lot of people do ask me this question, I'm getting a gift from my friends or distant relative, can I take that gift? The answer is no, you cannot take that gift, because if you take that gift, as per the rules, you are liable for taxes in India, because that income is accruing to you as a non-resident. They want to capture that illegal stuff and everything. So unless your parent gives you money as a gift and you accept it, then it's fine. Then you don't have to pay any taxes. Of course, you have to remember the US part. You have to file the form 3520 if the foreign gifts is more than $100,000 in a calendar year. So that's the gift tax that changed. So they have included a new definition: resident but not ordinary resident gifts. Then came about all the other factors, which is transferring money from there. So when you go and transfer, when you go to India and start transferring remittance money from there to here, you pay a TCS tax collection at source of 7% if you transfer more than 7 lakh rupees. They have said now the TCS tax collection source will be 20%. So it's a way of telling them. It looks like the income tax department or the RBI is looking at to curtail the money being taken out from India, because now India is at 9 months low foreign reserves. So it's dwindling. The foreign reserves are dwindling. So they don't want people to start remitting money out from India. So 20% TCS, but again, 20% doesn't mean you're paying tax at a rate of 20%. You have to file a return in India to get the money back. If so, filing the return in India also becomes very important in this case of remittance from India. So, and the fourth point, they said if you are looking to sell property, non-resident Indians selling property in India, which is an important thing, always happens. One way to avoid taxes in India is to invest that proceed in another residential property within a period of 3 years. Earlier, it was any amount you can invest at capital gains, but now it says if the capital gain exceeds 10 crores, then you have to pay, and then you cannot get exclusion of the tax in India on that gain. So anything more than 10 crores, no exclusion. Anything less than 10 crores capital gains, you can get the exclusion of the gains. So these are a few factors that are going to affect non-resident Indians, and that's what the budget is.
So, my friends, as always, I always said this is just a general directions, general guidance. Anytime you're planning on doing a major financial move, my personal opinion, you should always seek a help of a professional. You want to just double check, make sure that you don't end up with the consequences of taxes. Just with that small consultation, that can probably save you a lot just by simply not doing that particular transaction at that time. So I would strongly recommend, if you're in India or already there, or you're watching it from somewhere else, you can always book meetings online with Sanjeevji. Just go to sanjeevcpa.com and you can book it there, and tell them about your personal situation, and based on that, Sanjeev can guide what you should be doing at that time. So that's it for today's video segment. I really appreciate you guys all. Thank you so much.
Thank you.